Alright, what's up Coin Bureau crew? This is my first video on the channel. Very happy to be here, and we're gonna get straight into some hugely valuable trading strategy teaching so you can start banging out hot trades straight away. I'm here today to teach you an absolute game changer crypto trading strategy that each and every one of you can start using right away for killer precision entries and exits on pretty much any crypto pair. This is a personal strategy I have developed over time, back tested and traded live with a very high win rate of over 75% and high ROI returns. If you want to trade along with us, be sure to use the TOOBIT link in the description to sign up and claim the free capital we've organized exclusively for this crew. I'll also be doing some videos on tips and tricks on trading on the TOOBIT platform, and we'll go deeper into the exclusive campaign a little bit later in this video. Please always use risk management when trading my strategies, and we'll dig deeper into particular risk management techniques for this strategy a bit later in the video. If you enjoy the content, smash the like button and be sure to subscribe. Please feel free to ask any questions you have in the comments, and I will get to answering each and every one of them. Let's take a look at the indicators used for this strategy. 1. The fixed range volume profile. 2. Your RSI with divergences. And 3. Your Fu Manchu Market Cipher B. These are all free indicators that you can use on a free trading view plan. There are also full breakdown tutorials of these indicators on my personal channel. I will drop the links to these videos in the description. The first indicator we're going to be looking at is the fixed range volume profile. To find your fixed range volume profile, simply come to indicators on the top left of your trading view screen. Type in FRVP. This will allow you to bring up the fixed range volume profile, and make sure you favorite this so that you can easily find it when you need it. Drawing in the fixed range volume profile is relatively simple. The first thing you need to do is identify the current range. This is the current price action on Bitcoin against the US dollar, and you quite simply need to look for the swing highs and the swing lows of that range. Once you select your fixed range volume profile, you then need to draw it in, and it is quite simple. One click all the way at the left at the bottom of your current range, and then pull it all the way to the top, to the right and above your current range. Then make your second click, and you will see that it draws in your fixed range volume profile. You will see all of your volume in a profile view on the left. You will also see 3 very important lines on your charts. The first line is at the top, your value area high of the range. This is extremely important to understand, and this is similar to your overbought levels on an indicator like the RSI, but it is directly on your price action. The next thing to be aware of is the bottom blue line, your value area low of the range. This is similar to your oversold level on an indicator like the RSI, but it is directly on your price action. The third level and line to be very aware of is your middle white line on the indicator, which is your POC, which stands for point of control. One of the mistakes many newbies make is to enter trades at the POC. That is a no-no. The point of control gives us insight into the current direction, but it is a take profit zone for a trade and not a place to enter into a trade. Another thing to be aware of on the fixed range volume profile is what we call the high volume nodes. That is simply the peaks of volume on your fixed range volume profile. It is quite clear to see where these peaks are, and it is very important to take note of these points as being very significant horizontal support and resistance liquidity zones. If you like, you can take horizontal lines and go and drop them in at these points. Just be careful that you don't clutter your charts and confuse yourself too much. The next indicator that you will need to bring up, and it is the RSI divergence indicator. I like this one because it's extremely simple and it actually draws in the divergences for you, which is very helpful for beginners and actually saves pros a little bit of time. Add this indicator to your favorites so you can quickly find it when you need to. Once you've added it to your charts should now look something like this. You can clearly see your overbought levels at the top of your RSI, your oversold zone at the bottom, and your momentum zone in the middle of your RSI. Remember that when we are looking for trades, we are looking for trades towards the oversold level for longs and towards the overbought level for shorts. We are currently looking at the daily time frame. Here you can see a bearish divergence has been drawn in by the indicator. This, as I say, is helpful for beginners in learning to understand when divergences occur and how to spot them. For those of you who don't know what a divergence is, it is quite simply your indicator giving you a different reading to your price action. What we have here for this bearish divergence is price action giving us a higher high, while momentum on our relative strength index is actually giving us a lower high. This is a divergence on the charts, and as you can see, results in quite a powerful move. The third indicator that I want you to bring up is the Fu Manchu Market Cipher B. You can find it here under your indicators by simply typing VMC. Here you will find the Fu Manchu Cipher B with divergences. This is my personal favorite indicator of all time, created by CryptoFace, one of the most profitable traders, and also used by greats such as Jay Casper. Let me quickly show how to get your Fu Manchu to look like mine, nice and simple for this strategy. So simply click on your Fu Manchu indicator, then right click on the indicator and go to settings. There you will see these settings and try to follow the settings I have here. If you need a more detailed setup video, there is one on my personal trading channel. You will need to show the wave trend, show the buy dots, the sell dots, the div dots, and the fast wave trend. I want you to take out the gold dots. Leave everything else as it is, but try to take your wave trend overbought level 1 to 0. Make your level 2 45 and your level 3 0. Then the oversold level 1 0. Wave trend oversold level 2 minus 45 and the wave trend oversold level 3 0. Show the wave trend regular divergences, show the hidden divergences, don't apply the OBOS limits on hidden divergences, and then show the money flow. The rest for now you can leave off. Now your Fu Manchu should look like mine, and you now have all three parts of this strategy that you need. You have the fixed range volume profile, the RSI divergence indicator, and the Fu Manchu Cipher B. So let's break down this strategy. The strategy is actually quite simple and hugely effective and can be used in relative isolation, although I would recommend, of course, to always remain aware of potentially high volatility news events when trading. I would also recommend starting off by using this strategy on Bitcoin, and of course, always with new strategies, remember to backtest and paper trade before risking any significant capital. Alright, so as mentioned earlier, we have a beautiful exclusive bonus campaign from TOOBIT just for this community. So make sure you sign up at the link in the description. Take advantage of the free capital. You can see here that you can receive 50 USDT just by signing up. And with this strategy I have just showed you, you can build an entire trading account just with this free capital. You can also double your bonus when you trade $1,000 in volume on perpetual futures. There are also extra deposit bonuses. You can receive $30 just for depositing $100, and these deposit bonuses increase the larger your deposit is that you make. For those of you trading large accounts, you could actually take home a $30,000 bonus. This is free capital on your capital, and it can, of course, improve your level of profitability and your profit margins. So how does this strategy work? Number one, first find the current range and draw in your fixed range volume profile. Number two, wait for the price to enter either the value area high of the range or value area low of the range. Three, once price is in the value area high of the range or value area low of the range is when you get your sniper rifle out and take aim. Number four, now you want to see one of three things: either a divergence on your RSI, or a divergence on your Market Cipher wave trend, or a nice trigger wave on your Market Cipher wave trend. First, how to spot a divergence on your RSI. This RSI divergence indicator does make it really simple because it actually draws in your divergences for you, as you can see with this red line. If we look back in time, you can also see some of the other divergences that were printed, and be careful to only take the divergences that are low down on your RSI close to your oversold level. Do not use the hidden divergences in this strategy, which appear within your momentum zone closer to the 50 line. Spotting a wave trend divergence on Market Cipher is relatively the same to spotting it on your RSI. These blue waves here on your Market Cipher are known as your wave trend. When there is a divergence between price and your wave trend, it will draw in the divergence for you. That is these red lines. And if you go back in time, you will also see the printing of the bullish divergences on your wave trend. Here you can see a previously printed bullish divergence. For those of you who are slightly more advanced, I'm going to show you how to find a juicy trigger wave on your Market Cipher wave trend. On your wave trend on Market Cipher, this kind of a formation is known as a trigger wave. It is a very steep up and a very steep down on your wave trend with a beautiful dot. And make sure that you only take these trigger waves when your dot is close to or above your 45 line for your shorts. And the same thing in reverse for your longs. You want your trigger wave below the 45-degree line or close to it. And you want a steep down on your trigger wave and a nice green dot. There are two other levels of confluence for a strong trigger wave entry. I know this is advanced, but I like to push my crew. So number one, you look for a very steep downtrend in wave trend. You then look for a printed green dot. To give you confirmation of this trigger wave, you want to see your money flow, right? This section here is your money flow. You simply need to see your money flow pointing upwards. It needs to have an upward sloping angle for a long trade. As you can see, when this trigger wave printed, there was a very nice upward sloping angle on your money flow. Number three, you want to see your VWAP cross, which is known on this indicator as your fast wave trend. It is this yellow section of your VMC. This trigger wave was absolutely beautiful as it gave us all three levels of confluence. We had our green dot print close to the 45 line. We had our money flow pointing up, and we also had our VWAP cross to the upside. That is the perfect storm we need, and all three levels of confluence for our trigger wave. Remember, for long trades, you only take the entry if price is in the value area low of the range and you are getting a bullish divergence on RSI on the 4-hour or daily time frame, or you are getting a bullish divergence on Market Cipher wave trend on the 4-hour or daily time frames. And for those of you who are more advanced, the trigger wave printing on that daily or 4-hour time frame close enough to the 45 line with your three levels of confluence. This strategy can be used on smaller timeframes like the 15-minute timeframe, but I would recommend first practicing it on higher timeframes like the 4-hour and the daily timeframe. Now I'm going to show you how to execute your trades using this strategy. For this, we will use this example of price being inside the value area high of the range and our RSI printing a beautiful bearish divergence. Once you have your confluence to enter the trade, first draw in the trade using your trading view short position drawing tool. Add it to your favorites so that you can use it easily. Here we see exactly where the bearish divergence printed somewhere within this green candle. Place your short position in and make sure you set your stop loss above the value area high with a little bit of buffer for your stop loss in case of high volatility. Then make sure you pull your take profit down to the value area low of the range and make sure that you have a good risk to reward ratio. Your risk to reward ratio should always be above 1 to 3 for a juicy trade. One of my personal strategies for risk management and proper profit taking is to always take the first take profit as soon as you have achieved a 1-to-1 risk to reward ratio. So once you have entered your trade and achieved as much space from your entry as there is to your stop loss, try to take your first take profit and then place your stop loss actually below your entry so that you are now in a risk-free trade. You might find yourself only hitting take profit and then stop loss at break even a few times, but this will protect your capital and keep you consistent and allow you to compound your account. Then you will get the banger entries that sometimes will go straight to TP. As you can see with this trade, it would have been one of those trades. Your second take profit should be placed as a limit order at the POC of the range. This is where price will decide if it is going to rebound back into the value area high or if it is going to continue down to value area low to hit your full take profit. Then your final take profit should be at the value area low of the range for your short positions. What you can do is make it an almost full TP and leave something in the trade in case you do break the range to the downside. But you should be taking the majority of your margin out of the trade at this point, because this is when we will start actually looking for the trade in the opposite direction. I will also teach a hedge trading strategy on the fixed range volume profile in one of my future videos. Risk management. As mentioned, a good risk to reward ratio is always needed, 1 to 3 or above. Always use the golden rule of thumb for position sizing. Only trade 3 to 5% of your investment portfolio on leverage. Only risk 1 to 3% of your trading portfolio at any one stop loss. This strategy I've just shown you can be used with high leverage, 50 to 75x, but this takes skill and experience in the management of maintenance margin on cross margin and unified trading accounts. As with anything new, take it slow and start with low leverage and margin to get the hang of the strategy. 5 to 10x can be all you need for good profits on this strat. Let's go into some examples of how beautifully this strategy has worked in the past. As you can see, this is quite recent price action on Bitcoin, and we have already spoken about this beautiful short trade that came in, where we got the bearish divergence on our RSI whilst price on Bitcoin was clearly inside the value area high of the range. This was an absolutely beautiful trade of 12% plus on Bitcoin on spot. Another clear example of a banger trade on this strategy was right here on the 26th of September, when our Market Cipher printed a beautiful green dot trigger wave with our 3 levels of confluence, money flow pointing up, VWAP crossing, and our price was currently in the value area low of the range. From the green dot printing, this was a beautiful 15% plus trade on spot on Bitcoin. Another great example was just recently at the massive crypto crash that caused 20 billion in liquidations when Trump announced the news that he would be placing 100% tariffs on goods imported from China. This is a perfect example of why you need to be using strategies like this. When the rest of the world is freaking out, losing money, getting liquidated, you should be earning money. And I was one of the people who were able to actually profit from this disastrous black swan event that caused so many liquidations. Market Cipher clearly printed a wave trend, bearish divergence, while price was very clearly in the value area high of the range. If we look at where the divergence printed, it was somewhere in this daily candle, and this gave us a beautiful 11.5% plus short trade on Bitcoin on spot. Of course, with any kind of leverage, this is a beautiful ROI. And seeing these kinds of trades, you are, of course, thinking what I'm thinking. You can even use this strategy for your spot trading portfolio. To recap, this is a simple strategy with brilliant confluence logic that can be used to find precision entries and exits with high levels of profitability. Of course, I can never stress enough to use risk management. Always use a stop loss and make sure you are following all levels of confluence and sizing your positions correctly. Also, be sure if you are trading on cross margin that you have enough free margin available to act as maintenance margin in any drawdown. I hope you've enjoyed the content. Please share the video if you think that others could also benefit from this content. Let's empower the world and push crypto adoption globally. And from me, please remember my advice. Always play from a position of power and strength. Use your stop loss and do not get wrecked.